You've got a White House crypto czar. You've got a public position that Bitcoin is a digital commodity. You've also got a public position that it's the only globally acknowledged digital commodity. So the big existential question has been, is it a commodity? Is it a security? And the conclusion of it being a commodity makes it 100x more powerful than a security. And then the second competitive question is there a competing digital commodity? And the answer is no. The reason Bitcoin works is because someone that you don't know with a problem you don't have in a place you've never been to settles upon Bitcoin as a solution, and then you're walking down the street in the random place, they're like, and they think, oh, we are comrades.
For centuries, commodities have been the foundation of civilization, salt-built empires, gold-anchored currencies, oil-powered nations. Now, Bitcoin joins that lineage as the first digital commodity recognized at the highest levels of government. In just over a decade, it has grown into a multi-trillion-dollar market with a six-figure price outpacing every other asset in history. And in this world that runs on trust and scarcity, nothing else comes close. That's the latest message from Strategy's executive chairman, Michael Saylor. Even after all the ups and downs, Bitcoin is still leading the digital asset space. Both retail traders and big institutions keep piling in, and that says a lot about its role as a scarce, decentralized store of value in an uncertain economy. With a market cap around $2.5 trillion, it's hard to ignore just how much influence Bitcoin now has in global markets. Beyond the numbers, Bitcoin's appeal lies in the certainty of its design. A fixed supply of 21 million coins makes it immune to the endless money printing that weakens traditional currencies. Every year that passes, this scarcity becomes more visible, especially as governments expand debt and dilute the value of fiat. That's why more investors are treating Bitcoin not only as a trade, but as insurance against a financial system that feels increasingly unstable. Make sure to stick around until the end of the video as Michael Saylor explains why Bitcoin's growth potential from here could be far greater than most investors realize. Before we jump into it, just a quick reminder, only a small percentage of you watching are actually subscribed. If you're getting value from the videos, hit that subscribe button. It's free, it supports the channel, and you can always change your mind later. Here's Michael Saylor now with his updated outlook on Bitcoin.
Has your argument for the court case for Bitcoin evolved? And if yes, where does it stand today?
I think it's gotten much easier over the last 12 months because now you've got the explicit endorsement of the President of the United States. You've got a White House crypto czar. You've got a public position that Bitcoin is a digital commodity. You've also got a public position that it's the only globally acknowledged digital commodity. So the big existential question has been, is it a commodity? Is it a security? And the conclusion of it being a commodity makes it 100x more powerful than a security. And then the second competitive question is there a competing digital commodity? And the answer is no. And we fought over that for 4 years, but now there's pretty much no fighting. It's David Sachs said the White House acknowledges that this is a decentralized network, an asset without an issuer, it's special, and there's no second best, there's no other thing. And so I've said, if it's not going to zero, it's going to 1 million. The point really is every public company in the world is capitalized on euro debt or US dollar debt for 100 years. And now you have a commodity that's a scarcity that it's legal to capitalize a public company on. If you can capitalize a company on an asset that's appreciating 55% a year, and if the S&P is appreciating 12 or 13% a year, and if the after-tax return of euro debt, the euro one-year rate was 200 basis points when I last checked, and SOFR's 400. So if you're capitalized on stuff that's got an after-tax yield of 2 to 3%, you're 10% less than the cost of capital. So ergo, every company in the world is capitalized on a capital asset that's bleeding 10% of their economic value every year. And this is the first time we've got one that is positively yielding. And we've only known that without debate. Truth is, what settled the debate? The SEC approving Bitcoin ETFs in January, followed by the embrace of Bitcoin by the Trump administration, followed by the designation that it is the unique digital commodity in the world by David Sachs in March. That's how long, plus followed by the accounting profession mandating fair value accounting, and the Secretary of the Treasury telling banks, and the banks, not just in the US, but by inference, every bank in the world is being directed to start banking Bitcoin by the head of the Treasury, the FDIC, and the OCC. So all of that dates to November 5th of last year. So we're not in at the end of the year one. We're in year one of institutional adoption, the inflection point where it's pretty clear it's not going to zero. And it's pretty clear that it's at least as valuable as gold. But no one can capitalize on gold, so it must be 10 times more valuable than gold. Nobody can stop it. No one wants to stop it. And yet 99% of corporate executives don't appreciate it. The people that embrace Bitcoin first are people who either felt that their path to success was blocked by the conventional world or the traditional world, or it was hopeless, or they're staring at a certain death. And so I think that the people that get it first, they're the teenagers, the 20-somethings. Every time I go to a conference full of wealthy people, it's always the sons of the billionaires who know me. Like, I'm very famous with rich kids. All the rich kids in the world know me. All of them. They're like, could you convince my grandma to buy Bitcoin, or my dad? I want you to talk to my dad and explain to him. So it's the 20-somethings, and they're looking for the next thing, or it's the zombie companies, or it's the meta planets. It's like, I had a hotel chain, it's going bankrupt, I'm dead. It's the people that have a terminal illness. So they're all very motivated to open their mind to a new idea. I think that if you're comfortable and happy, you're not. I think that the inflection point was November 5th of last year. If you had to point to one, this entire industry was waiting to see whether the securities regulators would embrace it, whether the banking regulators would embrace it, whether the commodities regulators would embrace it. And I think we knew the answer. We knew we were going to win in 2020, but it was going to be a long, grinding battle of attrition to win, but we knew we were going to win. But I think after November 5th, it became like a landslide obvious. It's like, okay, the entire government flipped. The Senate's pro-Bitcoin, the House is pro-Bitcoin, the Cabinet's pro-Bitcoin, the head of the NSA, the CIA, the FBI, the healthcare, Department of Health and Human Services, they're all pro-Bitcoin. All the financial regulators are pro-Bitcoin. And everybody else in the world, every other regulator takes their cues from the US. Even if they claim they don't, even the enemies of the US, the Russians, the Chinese, anybody that's deemed to be a political competitor, they still actually take their cues from the US. So if the US embraces this as a digital commodity, Hong Kong flips, China flips, Russia flips, everybody flips. And the dominoes are falling pretty rapidly for the past 6 months. I think that the European markets are catching fire. If you look at the results of Blockchain Group or Smarter Web Company or H100, there's just a lot of Bitcoin treasury companies popping up here. There's probably going to be one unicorn, or superstar in every single market that catches fire and grows 100% plus a year, or hyper growth. And then you'll see a dozen other that will follow it. And I think they will do it because the equity capital markets in Europe are moribund, and the credit markets in Europe are weaker than the U.S. Right? I mean, the U.S. credit market is 4% interest, or 4.20 for a one-year bond, but in Europe it's like 2.20. So basically you're not getting any yield if you're a credit investor, and the equity's based upon growth, but all equities valued based upon future expectations of fiat cash flows. And if you're not growing fast, then the equity is going to be weak and illiquid. And the dirty secret is there's 50,000 public companies. The 500 greatest ones are in the S&P 500. Most of them are US based. And then of the 500, 493 of them are failing, and there's 7 that are winning. And so the dirty secret is, out of 50,000 companies, there's the number you can count on one hand or two hands at any given time that are winning, and everybody else is just trying to keep up, right? And how do you win? You need a digital monopoly, right? If you happen to have a digital monopoly and you can sell something to 1 billion people, then you're going to win. And that's what Meta is, and Google and Apple and Microsoft. They're all digital monopolies. They're more powerful than governments, right? And so now, if you're one of the 400 million private companies or one of the 50,000 not digital monopoly monster companies, how do you win? You know, and the answer is you basically merge with a digital monopoly bolted onto your capital structures. You ever see that movie you ever see X-Men, you know, where you see the Wolverine and he starts out as just a normal dude, and then they actually fill him with the adamantium and they give him indestructible exoskeleton, and that makes him the Wolverine? Well, Bitcoin is that. Like, you're this normal dude, and what you want to be is indestructible, supermortal, or superhuman. And I'm telling you, what you do is you basically infuse the capital structure of the company with digital energy or digital capital, and that turns you in, you know, from a $10 million dying hotel company into an $8 billion monster, right? And so I think it's a matter of time before people that realize, like, you can't fly, you don't have laser eyes, you're not indestructible, and Apple and Microsoft are.
Michael Saylor's argument just moved from theory to policy. Over the past 18 months, the US moved decisively. The SEC greenlit spot Bitcoin exchange-traded products in January 2024, unlocking institutional access that had been blocked for a decade. That approval materially increased trading volumes and liquidity for Bitcoin and helped shift price discovery onto regulated markets. From there, policy followed markets. In early 2025, the White House signed an executive order creating a strategic Bitcoin reserve and a US digital asset stockpile, signaling Washington's intent to treat Bitcoin as a sovereign-scale asset. Banking regulators moved in step. The OCC reaffirmed that federally chartered banks can engage in certain crypto activities, and the FDIC updated its guidance to remove earlier roadblocks for banks to offer crypto services. The regulatory risk that haunted Bitcoin has been reduced. That doesn't erase volatility, but it changes the calculus for corporations and treasurers deciding whether to hold a non-sovereign scarce asset on their balance sheets. Saylor's core claim is that Bitcoin is a unique, globally recognized digital commodity with no second best, now sits on a much firmer factual foundation than it did 2 years ago. The result is an institutional inflection. Most corporate executives still don't grasp the implications, which means adoption can accelerate quickly once a few large players commit. If governments keep opening the doors, banks keep building the rails, and money keeps pouring in, then Michael Saylor's vision for Bitcoin would not be just possible, it's inevitable.
I think that Trump realizes that Bitcoin and the crypto industry in general is incredibly powerful politically and economically and technically, and he attributes a fair degree of his political success to the support of the entire community. So they're very enthusiastic. Every cabinet member is enthusiastic. The Trump administration's enthusiastic. They're going to harness it technically and economically, and that will progress. And I think, the Genius Act, the launch of the of stable coins, the Bitcoin strategic reserve, all of those things are indicative. The US went from grudging acceptance of Bitcoin, dragging their heels on everything else, and being fairly indifferent to the opportunity as of a year ago, to enthusiastic embrace of Bitcoin, enthusiastic embrace of all the digital assets industry, and they went to leading the industry, and now they're kind of in the driver's seat. They're probably the most progressive, and other companies or countries are going to have to keep up.
But would you say that we can apply the playbook, acquire Bitcoin, laser eyes, indestructible? Can we apply that to nation states?
Yeah, sure. It just takes clarity, and it takes conviction, and it takes consensus. The challenge with nation states is they have like 10,000 people on the board of directors, and I mean technically, how many senators, how many Congress persons, how many political actors? So, in my experience, it only takes one member of the board of directors who's a conventional thinker to block the entire company. And so generally the problem with corporate adoption is one conservative or traditionalist on the board cripples the company. In a country, you have a lot of parties and a lot of concerns about that. So the obvious winning move is if I ran a country and if I had the power, I would print my currency, buy Bitcoin. And after I finished with that, I would borrow money, sovereign debt, I would print debt, and I'd buy Bitcoin. But I don't have a country. It's above my pay grade. And countries have a lot of other dynamics. There are a lot of other political actors. You've got your unions, you've got your political parties, you've got the IMF, the World Bank, you've got the opinions of your neighbors, you've got your opinions of your citizens, you've got your opinions of everybody under the sun in the media. And so I'm not here to tell you what they can do. I'm an idealist. That's what I would do if I could. But neither am I critical. The truth is, there's a million people that don't go 150% all in on Bitcoin, and I don't judge them for it. Maybe they had a reason to not do it, right?
Or they didn't see the need. That's what you always talk about, and I think you're very right with that.
Or sometimes somebody sees the need, but they can't build consensus. Like a CEO sees the need, but he can't convince the board of the need. Or you're the mayor or the president of a country, and you see the need. That doesn't mean that every member of the Senate and the House and your cabinet sees the need. So it's a political process. You have to build consensus.
But if the US really goes through with the strategic Bitcoin reserve, that is a signal to every other government in the world that is something that we have to look at. That is actually even a signal to Apple and Google and Facebook and Amazon that they have to look at Bitcoin, isn't it?
Yeah, leadership matters, and if you have one leader, they create air cover for people to come behind them, whether it's a nation or a company or an individual. And so I think it does matter, and each time you do something, it gets easier for the next cycle. Like even with us, like when we decided we wanted to sell a preferred stock, everybody said that's impossible. No one's ever done it before, and it was difficult. It took us a couple tries. The second time we did it was much easier. The third time we did it, it was the easiest deal we have ever done. The first Bitcoin company that does it, they'll be following us, and they'll just say, yeah, it's just going to be like this one. Well, the first two we did were the two most successful preferred stocks in the century. So the Bitcoin company that issues a preferred stock backed by Bitcoin will say, well, you see, people thought it couldn't be done, but Strategy did it, and it was the most successful preferred stock in the last 30 years. So that's why we're doing it. And then the investors will nod and say, okay, I get it. So the point is you have to do it, and then you have to, sometimes it takes 2 or 3 tries, and sometimes you get your nose broken or bloodied a bit, but the alternative is always worse. Well, there's a ton of corporations and actors that adopt Bitcoin that I didn't even know about, that did it for reasons I'm unaware of, and of course, the classic example are all the OGs that adopted Bitcoin because they came out of Argentina and they were victims of currency collapses, and I didn't live through their bank collapses, through their currency collapses. So I would say the beauty of Bitcoin is it is a solution to the economic problem faced by 8 billion people and 400 million companies and who knows how many entities, and all of their problems are different, all their circumstances are different, and it offers it's a different solution for someone living in a war zone than it is for someone living in Shanghai, than it is for someone living in North Korea, than it is for someone living in Germany, than it is for someone living in Nigeria, and even is different for you in Nigeria 5 years ago versus you in Nigeria 5 weeks ago. So dynamically, everybody's economic challenge is evolving, their circumstances are different, and it offers everybody this opportunity to solve their problem with technology. And the reason it's successful is because it's this massive parallel shared nothing network where you've got hundreds of millions of people thinking independently for themselves in their own local circumstances without asking for permission from anybody else to think. So for me to presume that I know why someone did it or I understood the problem, it's like no one person really understands the entirety of the human experience. It's just too multifaceted, too high bandwidth, and generally the best solutions. The reason Bitcoin works is because someone that you don't know with a problem you don't have in a place you've never been to settles upon Bitcoin as a solution, and then you're walking down the street in the random place, they're like, and they think, oh, we are comrades.
Yeah.
Right? It's like, I don't know you, but I had a different thing, but we solved it with a common network and a common asset and a common protocol. And you might not even have time to figure out what their problem is, but it doesn't matter. They're helping you. You're helping them. Right? It's just one of the most magical examples of human cooperation to further the human condition and the civilization that I've seen.
Bitcoin corporations, what's going to happen to them in a possible bear market, or is there not even going to be a bear market? Because I think you said in one interview, you said winter is not coming.
Yeah, I think that there's one group of people, and they tend to be traders, and they're charters, and they like to, fill up their charts and their computers with lots of data, and then they like to back calculate and back solve and do regression models, and they try to fit cycles, and they try to use whatever happened in the past to predict what happened in the future. And I think that idea of using data from the past to predict what happens in the future, it works in a closed system, in an adiabatic system where there's no new energy, there's no new structural elements introduced. And so I get it for predicting a pendulum or a swing or something like that, right? Or maybe tidal forces acting on the Earth for the last 5 billion years because the moon hasn't changed. But if a new moon came along, right? If all of a sudden a second moon and then a third moon came along, and someone was looking at all the tidal patterns for the past 100 years, you would say, are you crazy? There wasn't a third moon 100 years ago. So if the structure of the system changes, if it's not a closed system, when it's an open system, when new developments are forming, I don't think you can look back. So for example, the crypto winter took place because massive structural leverage and rehypothecation. You stacked up, people took, they issued Luna token, and then they issued, UST. They issued Terra stacked on Luna, and then they traded UST for Bitcoin. And then when the Luna collapsed, the Terra collapsed, the Bitcoin got panic sold, and that created a rippling wave of redemptions, and it bankrupted FTX and Genesis and BlockFi and Celsius. And they had daisy chains, a whole set of credit instruments on top of tokens, which were 100 to 1 levered, backed by air. Okay, and if you have that structure where you have, if I took a public company and I capitalized it on a security with 1% of the float outstanding, and then I took another public company and capitalized it on the second public company with 1% of that float, and if I took a third public company and capitalized it on the second, I would have 1,000 to 1 or 10,000 to 1 lever, and there's $1 million backing $10 billion of market cap. Then when I crush the one in the middle, everything collapses and you get your crypto winner.
Michael Saylor's point that Bitcoin has entered the political mainstream is now backed by policy. On March 6, 2025, President Donald Trump signed an executive order creating a strategic Bitcoin reserve and a US digital asset stockpile. The reserve will hold around 200,000 Bitcoin from government seizures, and importantly, these coins will not be sold. That makes the United States the first major power to treat Bitcoin as a strategic asset rather than a liability. This followed the January 23, 2025 executive order that formed a presidential working group on digital asset markets. The order directed regulators to improve clarity for banks, develop frameworks for stablecoins, and explore a national digital asset stockpile. For Saylor, these steps answer the question of whether the US government intends to fight Bitcoin or harness it. His view is that the shift from hesitation to embrace puts America in a leadership position, and other nations will be forced to respond. Already, corporate treasurers and tech giants are watching the signals from Washington. If the US government recognizes Bitcoin as a foundation of economic strength, ignoring it becomes harder for every institution, from Apple to the IMF. Consensus is still the challenge. Governments are complex, corporations are cautious. Yet the air cover from US leadership changes the tone. Saylor's argument is simple. When the largest economy on Earth decides Bitcoin is strategic, the rest of the world eventually has to follow. If you want to stay ahead of these signals and know exactly when the market's heating up or when it's giving you those rare buying windows, I break it down every day in the Crypto Nutshell, my free 5-minute daily crypto newsletter. It's built to give you quick, actionable insights so you can make smarter decisions without spending hours buried in charts or headlines. You'll get clear signals on when to buy, when to take profits, and the latest news that could move markets, all delivered straight to your inbox. Just click the first link in the description, enter your email, and you're in. Don't pass up the chance to stay updated and make informed choices in the crypto market. Anyway, guys, I hope you all enjoyed today's video and that it gave you some value. I'll see you all in the next one, and as always, all the best.